All right. Hey, everyone. Time for my second session here today. We're going to do the analysis now for the week, looking at the bigger picture. All right. We're going to take a look at Bitcoin. We're going to take a look at the Nasdaq. We're going to take a look at bonds, and anything else you guys want to look at. All right. So let's get this thing started. If you're new to the stream, welcome here. We don't need these moving averages on here. I'm going to take these off. So in this stream, this is what I do. So first, I run through the economic calendar because we want to be aware of what important events could be coming out this week that can affect our decision making and our risk. Second, we're going to take a look at these numerous markets. We'll start with Bitcoin and we'll go through the list of a few key markets here to prepare you for any key technical levels that may appear during the week and potentially present opportunities that you can capitalize on if you know how. And then after that, I'll answer questions, and if you want to look at a particular market or something, you could put it in the chat, and then I can take a look at it at that time. I normally, I used to do the Trade Scanner Pro after this, but I now do the Trade Scanner Pro every Monday, Wednesday, and Friday at 9 a.m. Eastern time. And today we had a nice trade. You can go take a look at the stream. It's on my channel. You go watch that stream. And by the way, if you subscribe to the Trade Scanner Pro, you should be watching these streams regularly. These are training sessions and they're free. They show you how I use the Trade Scanner Pro, how I adjust it, using the counter trend mode if I have to, in order to align with the market momentum on small time frames. Now, it's ideal for people who trade prop firms because I'm using a prop firm account. I'm using an eval account from Apex. And the goal is to see if I can beat the eval using this method, which is sustainable. Because sure, I could beat the eval in a couple of days or whatever if I put on size, but what good is that if you don't have a system that can generate any type of returns anyway? Because you're just wasting your time. You're just going to blow the payout phase account, and you have to start over anyway. What's the point of that? So I'm demonstrating a sustainable system, and so far I'm up almost about $1,000 now on this account, and I'm coming from -8 something. So essentially, I made almost $2,000 in this account so far. Okay, but I had to come back from that 800 whatever 850 whatever it was. Okay, and now I can show you. I can actually show you that account. All right, from earlier. This is the account right here. Okay, and this is the money I made. This is the profit that we had from earlier, and you can see my P&L. All right, that's where I'm at now. I need to make $3,000 in order to beat the eval. Okay, so anyway, watch my AM streams if you want to see how that's done. Anyway, other than that, feel free to say hello, share what city or country you are from. That's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. And just a couple of real quick things here. I mentioned it in my earlier stream as well. There's a YouTube channel that I want you guys to check out. Okay, make an effort to check this channel out. It's called Tommy Anytime. I'll put the link here on the thing, like I had done earlier. If you go to YouTube, now the reason why I'm promoting this guy, because I don't promote any guys usually, specific people. He has nothing to sell. Okay, he's not selling you anything. Tommy Anytime. He's an Australian guy, Australian mate. And what he does on his stream, hold on, let me make sure this is right here. What he does on his stream, first of all, his streams are hilarious, but he picks on fake gurus, particularly some people who trade, and he he shows you exactly how they scam you. That's what I think is most interesting. Here's his link. Okay, here, check that out. I put it in the chat. And make sure you go there. You don't have to watch it now, but check this out, okay? Tommy Anytime. Check this guy out. He is funny, but he shows you how you get scammed. He shows you how P&Ls are faked. He shows you how withdrawal receipts are faked. He shows you all the details. Usually people like me, I complain, this guy's a fraud, blah, blah, blah. But I don't go about like, looking at every little thing that they do and demonstrating how they're a fraud. This guy does that, and he's really funny in the process. Okay, I mean his sense of humor is just hilarious. So guys, check that out. Hey, Gregoris, again for round two. Savi from Brooklyn, how are you? I haven't seen Savi in a while. He doesn't really talk like that. From Brooklyn. Savi doesn't talk like that at all. But good to see you, Savi. All right, glad you're still there. So yeah, and also make sure you check Stian. Stian has his Trading View profile, and he put some scripts together for free. All right, so check that out. It's very interesting. Here, I'll put that in here as well. Okay, so you guys can check that out. I got to just do that real quick because the guy has done some great work, and he's trying to become a pine wizard on TradingView. So the least you could do is go over there and like boost his script, and he would really appreciate that. Okay, he's still working with me. He's just he's got a lot going on, and I have to give him some feedback. This should be his that should be his URL. Okay, for the TradingView profile. Check out his links, check out his scripts, and see what you think. Again, they're free, right? And then give him a boost so that you can help him achieve his goal of being a pine wizard. All right, here, I'll just put that on the screen real quick so you guys can see it. Okay, there you go. All right, so anyway, all right, so let's move along here and let's get into the analysis, shall we? All right, hold on. Before I do that, let's see, let me see how depressing my numbers are today. Let's see. Oh man, it's depressing when I have more people on YouTube than I do on Twitter watching. That's pretty bad. All right, but I appreciate all 5 of you that are watching. But still, you know what I'm saying. All right, every day I have to question myself. Man, why do I do this? All right, so we're going to begin with Bitcoin. Again, people, if you have like a symbol that you want to see, excuse me, don't be shy. Put it in the chat, and we'll take a look at it once I get through my analysis portion. And feel free to ask questions as I go about doing this. So we're going to make this chart bigger over here. This is my daily time frame. Oh, actually, hold on. Before I even get to this, I got to talk about the economic calendar. Man, I forgot. Okay, so first, there's a few things like scheduled for tomorrow or whatever, but they're not even worth mentioning. So don't worry about those. The first significant economic news pieces start on Wednesday. Okay, so Wednesday we have ADP employment change, which I'm not sure what time. You have to check the timestamp. That's a preliminary non-farm payrolls. It's sort of like a preview of it. So that could potentially move a market if there's any surprises. So you want to be aware of that. Also, on Wednesday, there's core consumer, core PCE, consumer price expenditures or whatever. Core consumer price expenditures, core PCE. That number is a number that the Federal Reserve uses as part of their inflation calculation. So I'm not sure what time that comes out. That may be an 8:30 a.m. number. That may be a 10 a.m. number. You're going to have to double check. I will be streaming at that time. So we're going to have to be, aware of that number coming out because that can move markets if there's any surprises in there. So again, that's core PCE. Double check the timestamp. Now, after that, in the evening, we have Bank of Japan. They have their rate announcement. And that's probably around midnight because they have their press conference like the next day. So that looks like it's around midnight Eastern time. That's important if you trade yen crosses. Like if you trade Forex and stuff like that, you might want to be aware because the yen is a pretty significant currency, right? So double check that. That comes out. That's Wednesday evening going into Thursday. Now, on Thursday, there was ISM manufacturing, I believe, coming out. I believe that was on Thursday. Maybe you want to double check that one. Also, I saw that Europe has their PCI number. That might be important. I'm not a PCI, CPI. I can't even get the letters right. Euro has their CPI, and if you trade Forex, again, that may be significant. If a news item like that is typically 3 a.m. Eastern time because that's when the European or the London session opens, and that's often when those news items come out. So I wouldn't worry about that if you day trade U.S. markets. And then on Friday, of course, it's the first Friday of the month, and we have non-farm payrolls. Okay, non-farm payrolls is at 8:30 a.m. Eastern time. It's next to FOMC meetings. That's probably the most important economic news item that comes out. That could move markets in a major way if there are any surprises. So you want to be aware of that. And also, not only that, but it could set the tone for the day as well. And I will be streaming on Friday after non-farm payrolls. So we'll see what kind of market we get after that information reaches the market. All right. Okay. Let me know if you have any questions about that. That's pretty much the economic calendar. Everything else, that's not all the items. There's other items, excuse me, but I just like to abbreviate to the ones that I believe are the most significant. Let me know if you have any questions about that. Let me see what does the chat say. Okay. Um, huh. Why does the thing put a smiley face? That's weird how it puts that. Oh, I guess it's because, huh. Does that show up on there? That really shouldn't do that. Why does it do that? You guys got those links, right? Like you could see them, but it gives you like a little. That's not really like. It gives you like a little icon there. I guess because of this. I guess when you do HTTP and then you do this, right? Yeah, that's what it's doing. Man, why does it got to do that for? I'm trying to put a link in there. How am I supposed to share links? Maybe maybe one of you in the chat can like retype the link in there so that it appears properly. Because you know. Anyway, I want people to go to that link, and I'm pushing that guy Tommy Anytime, or just go to YouTube and search Tommy Anytime because it's an eye opener if you're a beginner. All right. So for those of you that read my analysis, I published this on Saturday. How many of you read my analysis? Let's see who's paying attention here. Okay. All right, no problem. Hey, Kai. Oh, they work. Okay, cool. All right, excellent. Thank you for letting me know. Yeah, check that guy out. You guys will like it. All right, like he's not selling anything. Like I said, I don't promote people, but this guy needs to be heard. All right. So how many of you read my analysis on Saturday? Anyone? Hope a couple of people read, because in that analysis, as you can see here, this is the illustration that I put for the week, right? Looking for a pullback into the old resistance, new support. Now, guys, hey, Dejan, how are you? Cool. All right, cool. Guys, remember the week before in my analysis, I talked about scenarios, right? And I talked about one of them. If we break that resistance, if we push it, you're likely to see the squeeze. We got the squeeze. It's just a matter of catalyst. But remember I said the probability of that thing breaking the resistance was greater and that a short was a bad idea. Right? Remember that? So, yeah, anyone that was like, oh, it's a short. Well, this is what happens. And the reason why I was so confident about that break was simply because this is a failed low. This right here. Right, let me highlight it. This is what made me so confident. That right there. It's a double bottom. Not only is that a double bottom, but it's a higher low, right? Relative to this low. I point this out all the time. This is a higher low. So where there's higher lows, they're typically followed by higher highs. That means that resistance has a greater probability of breaking. That's the way I like to think of that. I could be wrong. Maybe the resistance holds, but the thing is, you should at least have an idea that shorts are going to be riskier than longs. And if you're going to buy a breakout, this would be a breakout worth giving a try if you're going to do something like that. I'm not a big fan of breakouts, but if you're going to do it, this would be the better choice. This is the type of breakout. This is the type of context where a breakout is more likely because of the previous structure. I know people don't like that because they want to hear like definitive things like, whoa, Bitcoin's going to break out because, this news is going to come out and blah, blah, blah. Yeah, if I had inside information, I can tell you that also, right? But we don't have inside information. We have to go by probabilities derived by price structures that we can observe on the chart. And we can kind of gauge, it gives us sort of a gauge. So that's how I had an idea that shorting this should be a bad idea. right? And if anything, that can keep you out of trouble for those that are aggressive on the short side, especially for swing trades on this time frame. So anyway, we broke out. We went into this area right here. You see this rectangle? Excuse me, that I've had on this chart for quite some time. This is the next resistance area, right? And that's basically what, 90K to 95K? And we pretty much probed the entire thing, right? Up until that 95K area. We got what looks to be a sell signal on Sunday. Let's make that nice and big. And because it broke the inside bar. See the inside bar right there? That inside bar low? It broke the inside bar low, which would basically, I would consider that a sell signal for this scenario to play out, the pullback. Okay? But look at this candle. That's not what you should see. When the market is going to pull back, if the resistance is going to stick, this is the wrong candle. So this sort of cancels out that idea. In fact, this candle was a little bit lower. Let's make this nice and big so we can see here. Okay, look at this. This candle at one point, this is today's candle, was this low. Look at that. So it went significantly lower than the inside bar low, right? Than this low over here. And it recovered. That is not bearish. So when you see something like that, it's like, okay, you're looking for the pullback. That's not a pullback. So that pullback is canceled, is what that means. This is how you have to adjust. This is how you do that. You don't sit there and say, well, I think it's a short because you'll see, I'm right. It pulls back, blah, blah, blah. If the market is proving otherwise, you adjust, right? We follow, we listen. I follow one teacher, and that teacher is the market. And that teacher is the type of teacher that doesn't care about your failure or success. It's just there. And you either listen or you pay. Okay? So this says here that this is not exactly a short. It's not a pullback. The pullback is canceled out right now. Now, maybe the next couple of candles over the week, maybe this resistance sticks. Maybe we get like a little failed high where it attempts to break out higher like that. And we get a pin bar somewhere in this area, and then maybe we get the pullback there. That's another potential scenario. So just because I have this scenario here like this doesn't guarantee it's going to play out the way I imagine it might. The market may give us a variation. Just understand that this general area on Bitcoin is a risky area for new longs, especially on the swing trade time frame. Day trade is another story. You can always day trade any level. You just want to be aware of certain things, just like I do on the earlier stream. So this isn't what I'm showing you here is not really relevant for that. What I'm showing you here is relevant for swing trades or investing, right? The bigger picture. Now, you guys got that? So let me know if you have questions about that. Let me show you something else that I see here, which is also an interesting tell. This structure right here, from this low to this high, is an impulse structure. Here, let me move this arrow out of the way. I haven't numbered it, but basically, this over here is a 1, okay? This little consolidation right over here, this area, that's a 2. This is a 3, definitely a 3. That higher high is a 3, which means we're waiting for wave 4. Wave 4 is typically a corrective wave. It's either a pullback or it's a consolidation type of wave. So here we are waiting for wave 4. What's compelling about this, like we don't know where wave 4 is going to unfold. We don't know where it's going to complete and turn around. But what's compelling about this is wave 4 is the easiest wave to forecast, meaning it has to have 3 waves in place first, right, to even wait for a wave 4. So that means the probability of a retrace is greater because we have 3 waves clearly in place. We just have to see how wave 4 plays out. Wave 4 can, as long as price stays above wave 1, which is this area right here, as long as price stays up inside that area, it can pull back anywhere in any variation inside of this rectangle and still be wave 4. Okay? So we can't forecast how wave 4 will play out, but we at least are aware that it's in a corrective wave, and we should be watching for some type of pullback, especially if we can get a failed low situation like this, a mini one. If we could get something like that in this area right here, that would be very compelling for a wave 5. Wave 5 can take this thing, to a higher high. In fact, wave 5 confirms when we do this, right? Wave 5, we can confirm we're in wave 5 when this high is broken. But that doesn't mean wave 5 begins here. It just means that we can say, okay, we're in wave 5. It begins obviously earlier. So, is this all we get for wave 4? This little jumbling price action here? Is this all we get? Is this it? That might be. It's very possible. Or we could get a steeper pullback. The point here is you have to watch if you have to watch for the higher quality opportunity, right? Let's say this is all we get, just a little consolidation. Well, that's going to be an opportunity for day traders, really, because swing trade, your risk is still higher here. Doesn't matter what configuration we're looking at. It's still, you're at a resistance. You want to buy this thing right at a resistance. The probability of faking out is also there. So it's a lower quality opportunity. It may work, but in my opinion, if you try this 1,000 times, you're going to get caught. You're going to get stopped out probably more often than not, probably more than 50% of the time. That's what I suspect. But if it gives you a decent pullback and it respects the 90K support and it gives you a nice reversal pattern, like a failed low, followed by a pin bar or something, now you have a high quality scenario. That's where you can be a little more aggressive. That's where, you get something like this over here, the reversal there, that's a high probability location. You could maybe take on a little more size than you normally would. You could be a little more aggressive. Maybe you take your initial position and as it goes your way, you add more to it coming off of that area because that's a high probability area compared to this area, which is, we could say this is 50-50. It still has it still has a slightly better chance of continuing higher because maybe wave 3 is not complete yet, right? Maybe it has a fake out. We don't know. Like there's so many variations. So we come up with a general idea. We form a general expectation based on the bigger picture. And then the market has to give us a look. It has to give us a scenario that we can anticipate. And then from there, we can plan a trade, right? That's how it works. You don't sit there like these clowns and we're like, oh, Bitcoin is going to go to 100K. I can smell it, right? That's just nonsense. And if you like that kind of nonsense, I can't help you. All right, go watch TikTok or something. All right. Hey, Howard, how are you? All right. Good to see you. So anyway, any questions about that? Does this make sense to you? And also at the same time, do you agree? It's okay if you don't agree. I'd love to hear why you don't agree. I'm not going to sit here and criticize you. Everyone has, their a right to their opinion, just like I do. I don't claim to always be right. I've been wrong plenty of times. But as you can see, like what I'm doing is I'm trying to give you a range of scenarios so that if the scenario appears, now you can do something. You have a piece of information that you could recognize. Say, oh, okay, I have done my homework on this. I got the pullback. I know it's a higher probability. I'm willing to give this a try. I got a pin bar. I got this. I'm using the Trade Scanner Pro on a smaller time frame. I'm getting the long signal, in this area right here where I would be expecting a long signal. Right? Remember earlier I said to use a Trade Scanner Pro, you have to have your analysis first. And then the Trade Scanner Pro confirms your idea, not the other way around. People sign up for this thing, and then a signal pops up, and they just jump in. No, that signal could be random. You come up with the idea first, and then the signal follows. And that also helps when you have a conflicting signal. Like you may be long the 1 hour chart, but then the 4 hour chart is showing you a short. You're like, oh, I don't know what to do. You follow the signal that aligns with your analysis, because the Trade Scanner Pro can't see the bigger picture. You have to see it, and you have to use the Trade Scanner Pro to align with it, right? And then it gives you your defined risk and your profit objective. I demonstrate this 3 days a week, so go watch my AM stream, and you will see how I come up with the idea. It's not that hard. And then the Trade Scanner Pro confirms. Take a look. We had a nice trade earlier today. And the second trade worked out pretty good too, which I once I have my good trade, I'm done. I don't take the second trade. But the second one was offered a nice little, there was a second signal at that time on a 30-second chart that was Nice. Anyway, any questions, you guys? Let me know. All right, I'm going to move on here to the next chart. So that's Bitcoin. By the way, Bitcoin serves as the leader for the space. So, like, for example, here, let's pull up something like XRP. Okay. There's a popular coin. I mean, so if Bitcoin can keep its act together, while these charts, they don't look exactly the same, if Bitcoin continues to rally, then maybe this thing continues. But again, look at the situation here with XRP, right? I don't care about the news and all the drama and all the nonsense. You have a support here. That's a pretty clear cut support, right? Consolidation, support area. It's trying to break this corrective structure, this little bearish price action here. Some people would argue this is a bearish trend. This is not a bearish trend. It's just corrective price action, right? A bearish trend, you could say, well, it's making lower lows. Right, but not really. It's got a common low over here. Look at this line. Look how many times it touches the line. That's a common low. That's not lower lows, people. A lower low means, we have this low right here, okay, and we break lower than it. That would be a lower low. And in that situation, I would say, okay, structure's bearish. But this is just mostly consolidation structure. This is mostly overlap, right? So don't be fooled by that. But anyway, the point is, if Bitcoin can hold its act together and keep going, this will probably start breaking resistances. That's what I'd be expecting from something like this. Does that make sense? So you can use Bitcoin as a guide when you're working with something like this. And as far as like investing in something like this now, I mean, you want to invest at a high or do you want to look for a pullback? There's been plenty of pullbacks to buy into here, right? Anyway, all right. I don't want to spend a lot of time on XRP. I just wanted to throw an altcoin in there. All right, let's take a look at Nasdaq. So we're going to look at we'll do QQQ, right, which is the Nasdaq 100 stock, the ETF. Now, essentially, this is what we trade in the AM session, but I'm using MNQ1, which is the micro futures contract, right? That's what we actually day trade. But here, we can get a sense of the bigger picture of what to anticipate as the week unfolds. Now, look at this. And by the way, I got out, I was in a position on the Qs, and I had 100 shares from the average price of 464. Today, this thing is at 472. We were as low as 466. I exited the position at 464. I sold a call on Thursday, and it got assigned at 464. I broke even on those shares, but I sold almost $2,000 worth of premiums along the way, all during this price action, right? Ever since the tariff delay, which was this big candle over here, all of this price action inside of here, I sold calls. Whenever I had an opportunity in the 460s, I sold a call because I had 100 shares. I was able to collect almost $2,000 in premiums. So I broke even on the stock, but I made money on the premiums. That is the great thing about options. I took some risk though. Okay. I mean, this thing was against me $6,000 or more. I made the money back, obviously, and I broke even on the shares. So it went from minus 6,000 to zero, and I made $2,000, almost 2,000 on option premiums. Nice for breaking even, right? So options are cool. Andre, hey, you look like a new guy. Welcome. I am thinking, okay, when, hold on, you know what? Let me do this so I could read what you're saying here. When token pre-sale start? Okay, I don't. That's it. I don't. You know what? I don't do that pre-sale stuff. Okay, that's like there's no price history, right? So that pre-sale nonsense, that's all based on hype. If you believe in whatever they sell you, whatever nonsense that they sell you, that's on you. I need charts, right? I need to see price history. If there's no price history, then it's a complete 100% gamble. Maybe it opens and goes straight to zero. We've seen that. Maybe it just whatever. Who knows? But I need to see price history. I need to see trend. I need to see levels. If I can't see that, I have no idea. It's completely random to me. Okay. So Kai says not. Oh, okay. I guess the guy's a bot or something. I'm not sure what you mean there, Kai. But anyway. But thank you for mentioning that. So here's the thing with the Qs. right now, so I'm out of this thing, right? And look what's happening. So we had the higher low. We had the test of 430 area and we made the higher high. Great. Now, one thing to point out about this situation with the Nasdaq. Have you been paying attention to all the ridiculous news all during this time? All during this time here? Here, let me give you a little highlight. All during this time, have you been paying attention to the nonsense news? Excuse me, and all the expert economists and all the renowned experts and all the blah 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 saying, "Well, the economy and everything's going to keep going to zero and blah blah blah," and all we're doing is going higher and higher and higher. Never listen to these people. Their goal is just to capitalize on attention. They don't care about the outcome. Okay. And they don't care if they're wrong. And then you say, hey, you were wrong. Well, the market's random. The market's the market. No one knows, blah, blah, blah. And these are like experts. These are like, oh, he works for this company. Oh, he's been, an economist from whatever school. It's all nonsense. Stop listening to it. It doesn't help you make money. It helps you sound smart. You want to impress your friends, maybe to help you get laid. You can impress a girl with that, but it doesn't help me though. But all I'm saying is don't waste your energy. Okay? The chart gives you the most valuable information that you can use to make adequate decisions, whether you're looking for an investment or a swing trade or a day trade. Right? But you have to know what to look for. So back to the cues here. I know I'm ranting. Back to the cues. So we have this general trend, right? The recent trend, the recent momentum is bearish. Let's zoom back a bit, right, to get some perspective here, because everyone again focuses on this bearish move, which was a great buying opportunity, by the way. Everyone's focused on that, but you have to look at the bigger picture, and we have to look at that move relative to the bigger picture. And that's really nothing more than just a steep higher low so far. Yeah, we broke some levels. We tested this area over here. And when we were there, remember, that was when I I made a video. You could see it on my YouTube channel. I said how I'm buying the bottom of the Qs. And I explained my Q position. And it was like that Thursday before we went to the 399 bottom. So, and I was pointing out these support levels. So look at that. If you could that was on the chart the entire time. All you had to do was look and be like, oh, this is a high probability area for longs. So if anything, you should not have been selling here, and you should certainly not have been shorting here, because that was a very high risk place for shorts. Of course, we can see that after the fact now, but I was explaining that before the bounce. Okay? That's how you have to look at this. Locations. That was a high probability location. Now, since then, we have a higher low. That 430 area. Can I get a line over here? Okay, we got a higher low. Higher low typically leads to higher high. Here we are, higher high. So what's next? So here's the thing. In this situation, I am paying attention to this structure now because it is the structure that's in play. We have a potential change because we have the higher low and we have a higher high. Something that's weak should not do that. Okay? But we do have this low. We have this lower high that's still here. So in the next few weeks, or maybe this week, as the market continues, we should see this peak over here tested. That's a highly probable scenario that we test that peak, okay, which is 494, 495 area. That's a pretty significant move. It's another 20-point move from here. So that's one possibility. Now, also keep in mind, we are at a resistant area here. This is a little minor resistant area. It may stick. And if it sticks, the question is, do we break this support? Right? The market has to answer this question. Do we break this support? If we do, then that puts this trend back, this trend structure, that puts this back into play. That means we're still bearish. That's how I will interpret that, which means be conservative with longs, be conservative with accumulating. If I were going to buy, if I saw that support break, like I'm not talking about a failed low or double bottom, I'm talking about a break. Like, we find ourselves in the next couple of weeks, we find ourselves testing that low. that's bearish. We should not do that. If the market is strong, it should not do that. If it does that, the market is not strong. We don't know if the market will do that. There's no way to know the future, okay? Only frauds tell you that they know the future. For us, it's up to the market to let us know, and then we adjust. So right now, we have the higher low, we have the higher high. Our current support is the 430 area, all right? And this thing is just not cooperating today. And our current resistance, we basically have one here and we have one up here, all right? Those are our levels. If the market continues higher and we break that level up here, that's going to be very bullish. So what does that tell us then? How does that help us? Well, for one, if we get the bullish scenario, we should be looking for support levels. We should be looking for support levels on smaller time frames, especially if we day trade. Those support levels should typically hold. Some minor ones may break, but we should not see a break of any major supports. This can help you with investing in stocks. Now, as far as right now, this moment, I would not buy more Qs right here. I'm out. I'm flat. What I want to do is, if I'm going to buy Qs, for one, I want to see if we can test this support here. If we can test the support there and I see stability, I will start possibly a conservative accumulation strategy. I'll buy 5 shares, okay? Not 10, 5. If we break that support and we start testing lows, then I'll probably, if I'm going to add to that, which again, not a big fan of doing that, if this market's going to stay bearish, then what I will do is maybe every 20 points or something like that, I will add 5. Okay, so what that will allow me to do, and the goal is to build up 100 shares. What that will allow me to do is basically accumulate over a very large range and get a good average price because it's the Qs. I mean, even if the Qs are bearish for another quarter, how much longer, how much bearish is it going to be? It's the Qs. We're talking about the top 100 Nasdaq stocks, Google, Amazon. Right? I know people, oh, if we go into a recession, okay. But you want to know something? If the recession gets priced in, guess what? If we're in the recession and it's priced in, the market's going to go higher because the market looks ahead. The market doesn't linger on nonsense behind. It prices in 6 months ahead. So if we're in a recession, it's going to be looking for positive data showing that we're getting out of the recession, and that's what it's going to be pricing in. So either way, again, I don't trade on that economic theory stuff, okay? I don't do that. I want to see levels. I want to see trends. And that's my accumulation plan if we get back to those attractive prices. If we don't, then I wait until another opportunity comes along, some kind of test of support if we break higher. Okay? Either way, I'm looking, I'm thinking at least on the long side, but I'm not going to buy anything up here. This, if anything, is a short opportunity on smaller time frames. Does that make sense? So, over the next, maybe like tomorrow and Wednesday, maybe the market pulls back a bit. Maybe the Nasdaq pulls back. This thing pulls back 10 points. That's not a lot for this thing. Make sense? All right. Anyone even interested in the Qs? Am I wasting my time here? If no one wants to hear about the Qs, because this affects all Nasdaq stocks pretty much, right? I mean, this is like your leader, just like the S&P. And the S&P and this thing are going to be very similar. So we can look at this as a representative of the stock market in general, right? Especially if you have a mainstream name, it's going to follow along with this thing. Make sense? So yeah, I would just hold off. If you have profits, if you're able to buy in at those low prices, if you have a long time horizon, like 10, 5 years or something like that, then you just hold on. There's nothing to do. If you have a lot of shares, you could probably mess around, sell some calls here and there, and just collect some quick profits on those, and without taking a whole lot of risk. But again, because you're in it with the mindset that you're going to be in it for a long time, right? That's not the same as being a swing trader or a day trader. You have to make sure you have that clear. I enjoy the QQQ talk. Okay, yes, because this affects a lot of other things, right? And again, especially if you're in mainstream stocks. All right, let's move along, and let's talk about gold, because gold is pretty popular these days. All right, gold has been pretty wild. And, gold is usually like where people run for safety or whatever. I mean, gold has been just like, it's been nuts. And when you have a situation like this in gold, A lot of people come out saying, "Oh, go to 5,000," and all that nonsense. Don't get sucked into that, please. Again, trend and levels. This trend is clearly bullish. There's no question. We have a level right there. Right, it's like a 3160, whatever. What is this? 30. So we could say 31 even around. The high of this is 3167. So 3150 area. Right? You round it to the whole number. That's a support level. So if gold pulls back to that, that's a potential buying opportunity. If you get a reversal, you don't just step in front of it. I wouldn't step in front of gold. Gold is very sensitive. Any little thing can move gold, right? Any kind of geopolitical, whatever, gold goes berserk. So don't get sucked into there's no gold in Fort Knox nonsense. Don't get sucked into the conspiracy theories. They've been saying gold is going to go to 10,000 for a long time. Don't get sucked into that nonsense. It's nothing but nonsense. And they're usually trying to sell you newsletters or something, right? Or some other kind of thing. So again, levels. Watch that level if you're interested in longs. Buying gold right now, while it may work out, I mean, look at this pin bar. You're taking greater risk. This thing can easily pull back 100 points. Easily. What are we at right now? 33.50. It's pretty impressive. Okay, cool. Yeah, so hey, UTXO. Well, everything I said about the Qs, pretty much the SPX is going to be similar. Like especially if you're playing SPX for options, that's where, like, for example, right now on that Q chart, you can do a like a bear call spread on the SPX where you short the lower call and buy the upper call. And since there's no assignment risk on the SPX, if it works out, hey, it works out. If it doesn't work out, it's just the dollars that's subtracted from your account. You don't get stuck with an an SPX position because there is no SPX, right? It's just options. So something like that I'd consider for the SPX. The SPX is like the big one, right? It's the big market. So, not sure how that might affect your margin. Oh, okay, yeah. So the vertical spreads work great on the SPX because you don't have to deal with assignment risk. Okay. So that all that is you're doing two vertical spreads together. That's what that is. And if you take away the longs, right, the protection options, if you take those away, basically you have a straddle, right? You have a short straddle. You're shorting the inside and you're buying the outside. I mean, that's what an iron condor is, pretty much, right? And a butterfly is a variation of that, where you're just doing two of the same, like you're doing, two short calls, and you buy one call outside or whatever, right? You buy one call, and you buy like the outside calls, right? And you have two short ones in the middle. But yeah, those are expensive though because you have to do 4 legs. But they're more risk adverse, so that's cool. It's very cool. But I like just the one side. An iron condor is when you're just betting on it staying inside a range, right? Because you're protecting yourself on both sides. Where a vertical spread, you're betting on one side, right? That's why, I would be vertical, like the bear call spread would make sense to me in that situation right now with the Qs. So anyway, all right, back to gold over here. So gold is in a tough situation, I think, because look at this price action right here. Let me make that bigger. Right, these are daily candles. Look what's happening. First of all, you had this bearish thing right here, this gap. Right? That's not good. You shouldn't see something like that. Look at this gap. And it was closed. See this? That's not cool. That right there actually acts as a resistance, believe it or not. And as you can see, price has been kind of rejecting it a bit, but it's not selling off. So here's the thing. Buying gold here, in my opinion, is high risk because you're buying right into this resistance. Yes, there's a pin bar here, but you're still buying a resistance. And not only are you buying a resistance right now, but if this thing breaks out a little bit, you still have to do all this, right? You still have to deal with that area. And that could be a failed high, that could be a lower high, that could be a double top, that could be a few things if you're not quick to take your profit, right? So you have to be prepared for something like that. Like if you know you're going into a low probability situation, like, all right, I'll buy gold, and if I see any trouble in this area, I'll get out. And if you don't see trouble, maybe it breaks out. But I believe with this type of formation, I believe that there's a lower probability that it breaks out and a higher probability that it fakes out. But again, only the market is going to show you the truth. You just have to be prepared for the look. Okay, so like right now, just based on this resistance, I would not buy gold here. Where I would be interested in gold is here. That's a high probability location where you want to see a reversal. Because what that would mean is you get this nice pullback, right? Lower high, lower low, but it's overall a higher low, and you coincide with the old resistance. You look for some sort of reversal pattern, and now you're buying gold at better prices. You're buying gold on a pullback, okay, rather than a potential lower high. Do you guys see that? And everything that I'm describing here, you can apply these things to other markets. Price is price. It really doesn't matter what we're looking at. Okay? It doesn't matter if this is Bitcoin. It doesn't matter if it's a stock. It's a market that has momentum, and that's all that matters. It's an active market. All right. Let me see what you're saying over here. But the SPX is full size options. Oh, okay. Yeah, I don't trade the SPX, but that makes sense because that's the full size contract. And I know like you need to do like short options in that thing. You need if they're not covered, like Iron Condor is covered. If you're doing it just naked, just pure premium selling, the margin requirements are like ridiculous. So that's why it's best to buy long options. It's best to do the covered versions so that you protect yourself from those ridiculous margin requirements. All right. Anyway, but interesting, UTXO. Let us know how you're doing with that too. It's always curious to hear. All right. So that's gold. Let me know if you guys have any questions about gold. All right. Now, also in the chat, do me a favor. Let me know if there's a market you want to see. The only reason why I do the long premium is to dramatically reduce. Okay. That's like, that's like you want to short a call, for example. But instead of doing a vertical spread 5 points wide, you do one like 50 points wide or 30 points wide, right? And that long call is like you buy it for like 5 cents, right? So you're not really getting any protection from it. All you're doing is getting a better margin situation. You're really just short a call. It's like a naked call. But in the broker's eyes, it's not naked. If you buy a call, it doesn't matter how far out of the money it is, and you pay 5 cents for it, it's covered, right? So, yeah. Anyway, but you open yourself up to all that risk if it goes against you. Whereas when you have the long call nearby, your risk becomes very limited. All right, I don't have to explain that to you. You know that. All right, let's talk about the bond market, shall we? Bond market real quick. Guys, let me know if there's a market you want to see. Is you want to see like maybe a Forex pair or something, or right? The bond market is important to pay attention to. I know a lot of people, beginners and stuff, they don't want to hear about bond market. Like, who trades bonds? Bonds are boring, man. Yeah, I know they're boring, but the thing is, the game begins with the bonds, and if you don't pay attention to the bond market, you could be missing out on some important perspective, because a lot of these economists and a lot of these central bankers and all these other people, they bring up the bond market all the time. And I see all these YouTube videos, bond market this, bond market that. And then you think, I guess there's something going on in the bond market. Well, and in reality, this is the 10-year note futures. There's nothing going on here for months and months and months. This is nothing. Look, it's just a consolidation. They get all they get all they get all excited when they see one big candle. Yeah, okay, I understand. One big candle can make people nervous, but all we're doing is overlapping. You can't lose sight of the bigger picture. There's no progress being made here, which means rates are not going anywhere right now. I understand that they're trying to pressure Powell into cutting rates, and he doesn't want to cut rates. Okay. Rates are not really doing anything. You could say, well, look, the market's going higher. Yeah, but it's overlapping. It's been here before. Okay, so what we want to pay attention to with the bond market is we want to pay attention to a dramatic change in structure. That would be a break of this low area right here, or we break this high up here. We start breaking one of those. Now that will be significant. The bonds move very slow because it's a lot of money moving around. Okay, and the bonds determine the cost of borrowing money. So it's inverse to the yields. If the bond prices break this support, that means yields are going to new highs. If yields go to new highs, that means money becomes more expensive to borrow. That means your car loan and all those other, if you have like variable loan, blah, 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 they're all, your bills are going to go up, right? Your loan cost is going to go up. Also, all these banks that have these bond positions, they're going to get caught. And that's when banks fail. They get margin calls because they're long too many bonds and the rates go through the roof. And then they get stuck in those positions, because they don't know how to trade. They're just like, we just buy bonds because that's what bankers do, right? So you'll start to see bank failures unless the Fed just tries to clean that up real quick and they just say, all right, I'll just give you money. We'll just print some money for you. Don't worry about it, right? But that's usually when you see that situation develop, right? If we start pushing lows on this chart. So that is what you want to pay attention to. We're nowhere near that right now. If we start pushing that, we break out higher, if we break the resistance, that means rates are going lower, which is a positive. That's also inflationary. So the current administration, obviously that's what they want. They want lower rates, which means they want this chart to go higher, right? And that means money becomes cheaper to borrow. So everyone starts borrowing money. People start buying homes. People start buying altcoins with it. They start buying garbage with it. They start, that's when you get those frothy situations, right? That's when you get asset bubbles. So just watch for that because that can also help guide you if rates start lowering. Because remember, rates trade freely. The Federal Reserve can affect rates, short-term rates, with their policy adjustments, and also they can talk. Powell can talk rates higher or lower if he wants to. Doesn't even have to do a policy adjustment. But if money becomes cheaper, that means what? Stock market likely going higher. That means, especially speculative stocks. That's when penny stocks become attractive again, right? That kind of stuff. So keep that in mind. Russell 2000, great place for small caps, right? That's where when we get cheap money, the money finds its way there first because people have all this extra money. Hey, we'll buy stocks with it. Right? Speculative money. Make sense? So that all begins with the bond market. And the bond market is really going nowhere. So all this economic forecasting, and it doesn't mean anything until the bonds make a move. Now, I believe we have an FOMC meeting this month. So maybe we get some clues, from the press conference. And maybe that'll help give the bond market some sort of, a clearer picture here. But as long as we're inside this range, it's best to expect the range to stay intact until it proves otherwise. Make sense? All right, enough about the bonds. I know everyone's sleeping now. Like, why is this guy talking about bonds? So boring. All right. Excuse me. I don't see any altcoin requests here. Anything? What can we take a look at? Oil. How about oil? Oil is a good one. CL1. Oil represents energy. And oil also can be a gauge of inflation. Energy prices, they usually look at energy prices, except when we look at the CPI report, they exclude energy. But energy prices kind of give us an idea. Low energy prices is deflationary. High energy prices is inflationary, right? If energy prices are going higher, that means the dollar is going lower, and things get tougher, right? Because now your gas goes higher, and transportation costs more, and all that stuff. When it goes lower, that's more stimulative because now things are cheaper. Moving stuff around is cheaper, right? So energy, what's happening with oil here? Like, this is where I start talking like I get on the economic front a bit, because that's where these instruments kind of give us some clues. Look at this. While we do have that bearish break, and I've talked about this before. Look what's happening. I mean, let's make this nice and big. This is a weekly chart, by the way. Okay. We had this pin bar try to recover off that break, and so far it's failing. Right? The previous week, you had this little doji type candle, which respected the old support, which is now acting as a resistance. You see that? And now we have this new candle. This is the beginning of this week. If this candle closes like this or breaks this low, that's not good. I mean, that means cheaper oil. and it's bearish for oil. So that would be deflationary, right? Which may make for an argument for Powell to cut rates, because they can argue, oh, we have deflation, Powell. You better do something. We're experiencing deflation. Look at oil energy prices. We need inflation, Powell. Start cutting those rates. So I am choosing, okay. Oh, again with this guy? Nah, this is a bot. All right, can I block this guy? Let me see. I guess it's better than the Russian porn guy. I don't know if I blocked him. I put block him on here, but he's not blocking. He's not being blocked. Anyway, I guess he's better than the Russian porn guy. Remember the Russian porn guy used to come in here and put Russian porn links. I never clicked on them. I'm just saying. All right. Anyway, so if this breaks lower, then what we're looking at is lower energy prices, and energy is a significant component of the S&P. So maybe this puts a little pressure on the S&P, possibly. Maybe that you'll see some deflationary arguments, and maybe that's supposed to, provoke Powell to cut rates. If he cuts, he's expected to cut, by the way, in June. They're pricing in, there's a very high probability that he cuts in June. If he cuts before that, the market is going to go berserk because that's not priced in. Okay? Yeah, remember you remember the Russian porn guy? Yeah, that guy was great. I would like, hey, we got Russian porn guy, and then he'd put some more links in the channel. All right. Yeah, you guys remember. Yeah. I guess he went out of business. I mean, he doesn't come around and put Russian porn links anymore. Anyway, so you guys see this oil argument that I'm making here, right? Like that's just based on this chart. That's what I suspect. I mean, if you guys agree, you guys have another perspective, I'd love to hear it. But that's if this continues lower, that's deflationary. That may put some weakness. And you would think, well, but isn't that great? Yeah, it's great for the consumer, but it's not great for the stocks that make up the S&P, the energy component of the S&P. So we may see some weakness there, which and based on we look in that Nasdaq chart, which S&P and Nasdaq are pretty much very similar as far as the way their charts look. S&P is at a resistance area right now. I don't even have to look at the chart because I know it looks like the Nasdaq chart. So I can use the Nasdaq as my reference. And if that's the case, this argues that maybe we see some pullback this week across those charts, right? If oil keeps at, if this continues bearish on this bearish path, and maybe it tests the low. Make sense? Oh, nice, Kai. Nice. The Korean won. Nice. Okay. Against the dollar there. Well, I guess that's the dollar against the won, right? Because USD was first. Yeah. Yeah, we could pull that up real quick. USD KRW. Again, oh yeah, look at that. This is the weekly chart, right? So again, what were we talking about? The range low. That's all. So that's what I mean. Like people are all wrapped up in economic blah, blah, blah. But there's so much valuable information on the chart. At least it could give you a sense of probability. At least. Right? So Kai, it's not really that I was right. It was just that I recognized the probability of the area. I could have been wrong. Maybe it could have broken that support. But the mistake people make is they look at this big candle and they're like, bearish, my RSI says bearish. And they get all wrapped up in that. Meanwhile, look at this. Remember we were talking about the failed low? The failed low situation? There it is. In an area where a failed low is likely to appear. That is all you need to pay attention to. Always people get wrapped up in irrelevant information. And I repeat it all the time. You guys hear me every week. I repeat it. And people still, they need that sense of, certainty. They need to grasp at that illusion of certainty. And that's what news gives you. The illusion of certainty. Oh, I kind of know what's going on here. The news said this. But you're actually consuming irrelevant information. The market is doing its own thing. And that's how you have to treat it. The market is doing its own thing, right? It's just a natural force. It does its own thing. And levels can give us a sense of what may unfold there because there are people behaving certain ways at these levels, right? And when you're at a support, it's attractive for people who want to buy. And if it doesn't sell off, that means all the people that are shorting it because they're reacting to stuff, they get caught. Excuse me, and this is what happens. It doesn't matter what market it is. A price chart is nothing more than an expression of human emotion through order flow, and it's a record of it on the chart. That is all it is. People see lines and math and this and that. We're looking at human emotion, how we're looking at human behavior expressed in prices. That's what we're looking at. So it doesn't matter what market we look at. The human behavior is still the same, right? That doesn't change. So anyway, I know I'm really ranting today. All right, so that was the Korean won. All right, so good one. Any other questions? Do you have any questions about anything? Because it's time for me to start wrapping this thing up. Any questions? So we'll put Bitcoin back on here. We covered some decent markets. I hope you find these streams valuable. Like, let me ask you guys real quick, just for some feedback. Would you rather watch me trade the Trade Scanner Pro during this session? Because I'll do that if you want. It's just I do it earlier, and I do that for like an hour during the AM Open. Do you want to see me do the Trade Scanner Pro here, or do you like to see this analysis? Do you like me to see like the bigger picture analysis and identifying levels and things like that? No problem, Savi. I'd like to hear from you guys. Like, what do you guys do? You guys want to see half and half? You're not going to hurt my feelings. I just want feedback. Like, I want to. If I'm going to stream, I want it to be worth your time. Because if it's not worth your time, then what am I doing? Right? I mean, you guys are still here, but sometimes I think you guys are here because you feel bad for me. You're like, man, this guy has no one watching him. I'll just watch him for a few minutes, so that he's happy. You like both? Okay. Okay. So my opinion, the time for UTXO. I mean, yes, exactly right. That's why I'm doing the market open and I'm doing the Trade Scanner Pro at the market open. This time at like 4 p.m. Eastern time, it's actually a really bad time for the Trade Scanner Pro. That's why I figured, like it's very erratic here. So the examples are really not that great. And I'm going to have to show like Bitcoin or something like that. So that's why I switched and I'm just doing the analysis here because it's, the close of the day and we want to get a perspective for the week. And then if you want to see the day trades, I have a whole session during the AM session. You like both too? Okay. All right. Well, maybe I'll mix it up a bit. Like maybe we'll do some analysis and then we'll see if there's anything interesting going on. Maybe we can throw around some trades. I'm not going to do that now. Like, here's the 1 minute on Bitcoin. Look at this, right? And there's a long signal that's in play right now. But look, it's kind of turned the wrong way. See that? But this is a bad time. The market just closed. This is a bad time to be taking something like this. So if it works out or not, it's going to be more random than during the market open because there's no volume right now. You like both too? All right, so I'm getting a bunch of boths. Just put. Yeah, well, I'll put like a fake one in the background or something, and then maybe I'll get people's attention, something like that, That's what I have to do. And then I have to say, hey, I'm going to show you how to make $1 billion a minute. And you can too for just one small payment of $1,000 and you can be a trillionaire by tomorrow. Trust me. And then look at all these satisfied customers. And I show you a bunch of fake reviews. Okay, Andre, can you tell me? Oh, again, this guy. They keep fooling me, man. This robot, this guy's a bot, keeps fooling me. I'm like, oh, look, I got a new comment, new guy. He's a robot. I can't even block him. They don't let me block him. I gotta complain to this platform. It says block user, and then I click on that, and he's still there. I can't block him. Let me see. Like, it's like, what's the point of having that functionality if it doesn't work? I'm gonna have to complain. I'm gonna have to write a support. I'm gonna have to generate a support ticket for this platform. But anyway, or maybe, I mean, look at this trade. If I took this trade, we'd be watching this thing just melt away over here. Look at that. That's no good, right? But it, price action is going to be much more erratic at this time. It's going to be much more random in a low volume period. So anyway, maybe I'll mix it up. Maybe we could just, you know what? Maybe we could do. We could look at Trade Scanner Pro trades on the bigger picture. Maybe we could do that and see what the Trade Scanner Pro is showing on the bigger picture. So instead of me taking trades, maybe we could get some perspective and see if the signals make sense. Maybe we could do something like that. You can block him, okay, Kai, that's cool. But I should be able to block. I should be able to kick him out of here. So it says I have an option here. It says block user, but I can't block him. You may see him because you are the owner. Oh, but you can see all the comments. Oh, really? Oh, all right. So maybe you guys can't see the new one that he just put up there? I don't know. All right, whatever. You got nothing else better to do. I mean, I mean, I don't know why this guy's wasting his time on my stream. I mean, come on, man. Dude, I got 8 people on YouTube. I got like 28 people on the other one here. Dude, there's much better streams to be trolling. I mean, you're wasting your time, man. There's much better streams with a lot more people than mine. Why are you wasting our time here? All right. So maybe what we could do, what do you guys think of this idea? We can pull up the Trade Scanner Pro, we could take a part of the session and we could go to the hourly chart, for example, and see where are there trades on the hourly chart? No, there's nothing there. But the thing is, we want to see what makes sense. Bitcoin, as we know, is in a possible resistance area. So in a situation like this, maybe we want to look for a reversal. Maybe we want to go into counter trend mode on a larger time frame for an aggressive short. So maybe we could do stuff like that, but I'm not going to actually take the trade. We could just talk about the idea. You could see the risk and the reward potential and all that stuff. What do you think of that? Maybe we could do something like that. That might be useful. For example, right here, I could go into counter trend mode and see, because we're in trend mode right now. And is there a trade here? Look at this. There's a trade that's open on the hourly chart that's short. And the question is, does it make sense to be short up here? And it's aggressive, but we are anticipating the pullback, right? Not only that, I mean, this short has been open for quite some time. How many hours has this short been open? The short was called back here. 73 hours. This short was called 73 hours ago. Okay. And it almost went to the profit objective. See that? It was worth something and then it gave it back. Okay. And look at the trailing, it's right at the trailing stop. So it's a reduced risk trade. But as you can see, this trade requires a lot of patience. It's a swing trade, right? So maybe we can go over stuff like that. What do you guys think? Give me a yes or a no. That makes sense to me, right? Instead of taking day trades at a time when it's bad to take day trades, right? And then maybe it'll give you more insight into how to use counter trend mode anyway, because counter trend mode can be very confusing, and it's a lower probability type of setup. And the only time I use it in my day trade streams is when I'm trying to align. If my bigger picture says something and my smaller picture doesn't agree, because the momentum on the smaller picture is not aligned, then I switch to counter trend mode because I want to be aligned with the bigger picture. All right, you guys, I know I'm just yapping here. All right, any questions? Do you guys like the idea of the Trade Scanner Pro bigger picture? I won't spend the entire session on it. I'll just try it out. We'll see how it goes. All right, because again, I want to deliver something that's valuable to you. I want this to be a good use of your time. All right. All right, so I don't see any other questions. I'm gonna wrap this up, guys. Thank you so much for your time with me here today. If you would like to send me an email, if you have a question about something, it's mark@markpremarkets.com. Maybe in a couple of days when the pullback has some time to develop. Okay. All right. Well, we'll see. We'll look at the trade. What I'll do is once we do some analysis, then we'll pop the Trade Scanner Pro on the bigger picture, and we'll see if it aligns. We'll see the value of the Trade Scanner Pro from a swing trade perspective. as opposed to the day trade perspective, which is what I do at the market open. So anyway, yeah. So you guys know where to find me, marketmarketmarkets.com. If you get a message from me unsolicited, or Steen or Alex isn't here today, uh, then that's not me, because I don't send unsolicited messages, and I do not ask for money on those messages or send you to weird websites asking you for money. So please don't get scammed. Block that person, report the person, and all that other stuff. You know what to do. All right. I repeat that because I don't want people to get scammed. And you may get something on Twitter, you may get something on Discord, you may get something on YouTube. Who knows? Make sense? All right, you guys. So I'll leave you with that. My next stream, Wednesday, 9:30 a.m. Eastern Time, the market open. And you guys, I'll be looking for you guys to join me there. And we'll see what we could find with the Trade Scanner Pro. Okay? And by the way, Steen is still, he sent me that update for the Trade Scanner Pro, and I have to give him some feedback on that. But we are working he's working on the updates. So we should be pushing an update soon, which for those of you who have the Trade Scanner Pro, you will automatically get it. All right? And if you don't have the Trade Scanner Pro, give it a try for 14 days. If you don't like it, you can cancel it very easy anytime. The link is on here on the screen. You see it the whole time. Check it out. All right? It's a valuable tool. I demonstrate it. And if you're not sure, there's a link in the description that gives you sort of a guide. But you could just go to my YouTube channel and watch my market open stream. Okay? Oh, interesting. Okay. But you see, you want to know something, UTXO? I never saw your XMR message. I never saw it. So YouTube blocked it from me too. But I see the fake guy. That one I see. But yours I don't. I don't see your message on here. So YouTube is blocking blocking it from me as well. Anyway, thanks for letting me know. All right, you guys. So again, I'll leave you with that. Yeah. So enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.